brings joy to everybody. Maybe. That was my thought process. So anyways, good morning, 6:35 a.m. on the street, about 3 hours before the open. Remember, later today, I'll be at the FX Street YouTube channel if you want to catch me for that. Welcome to QuantBox Live. Yo, yo, yo. This is where we get our global macro on. So this is your half hour of power where we uncover all the best fundamental investment opportunities across global markets. Hey, keep some free time, make some time available next week, maybe Thursday. I want to present amazing things about QuantBox. And I'm saying this because it forces me to yell at people and, make sure it all gets done in time. But I got some really cool news for you. Amazing stuff to work on. But anyways, my name is Wayne McDonald. I'm actually an economist. This is what they look like, right? They have horns and antlers, depending on, right? But anyways, I'm an economist. Yeah. And so when doing research, I thought, you know what, this is difficult. And if you've ever done some of this stuff with me, where I go through, and I do this, I go through central bank and other government, statistical analysis agencies of governments. I go through them on a regular basis, like all the time. I'm in all these databases, and then it's complicated to remember it all. So really what you should probably do is then bust out some sort of spreadsheet and start typing things in like, oh, well, retail sales in New Zealand was 0.3. Well, what was it last month? 0.4. Well, what was the change? 0.1. And you're typing all this in, right? Well, what's the chance you miss something? What's the chance you forget? What's the chance you put in an error? And just all of a sudden, it's overwhelming amounts of data. Really, either you're someone that's earning $250,000 a year and you just are good at doing that kind of stuff, or it's just impossible for a normal human being or any human being really to manage all this data, right? And as a former supermodel, I ain't going to manage all that data. Are you kidding me? So I'm like, hey, why don't we get a machine to do it? Why don't we get some AI, some algorithms, put them all together, okay? Plug into all these central banks around the world, pull in all the data, and organize it and organize our thoughts. So we could have like CAD yen. Well, what does the COT report say about CAD yen? So you have to look at the CAD and the yen in the COT report. Well, what about retail sentiment? What about seasonality? What about the technical trend? What about GDP? What about inflation? What about employment? What about interest rates? Oh, and it just pulls everything together automatically and organizes it and then says, hey, let's score all that. So now, okay, it's quantitative and qualitative if you look at that, because then you score them and you end up getting things like strong buys, neutral, sell, strong sells. Very cool. Helps you just suddenly be able to see the world. Look, there's all the positions. There's all the institutional money. And wouldn't it be nice if you could track the flow of it? Oh, you can with QuantBox. And then here, like, what do you think about euro dollar? Has anyone ever asked you that? I get asked that every day. What do you think about euro dollar? There it is. Look, there it is. That's what I think. When you analyze GDP, inflation, employment, interest rates, interest rate differentials, commitment of traders report, which is institutional positioning, retail positioning, seasonality over the last 10 and 20 years, technical analysis, so on and so forth, right? With linear projections, projecting the price out 1 week in advance, best case, base case, worst case. Well, that's what I think. There it is. That's what I think. It's right. It's my brain on paper. But it's not even paper, so it's even better than paper. So, hey, YouTubers, okay, this is Friday morning at 6:40 a.m. You're probably watching this Saturday morning. Yeah. Yeah, a little late, bro, a little late. Okay. If you don't have the $8, I can't help you anyways. But if you got $8 and you want to put confidence and intelligence behind your trading, swing by QuantBox.co. Check it out. I'll knock your socks off. I'll blow you away. Blow you away. So, anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Like I said, keep some time open next week. I think the only time I have available is Thursday around noon. But anyways, yes, speaking about blowing you away, uh, as a service, as a community, really wrapped around a service, we could do something um, mind blowing. I just want to know if you want to do it. Okay. Yeah, that's it. Like anything else, it's just time and money. So do you want to do it? I'll show you what we can do. Right? Yeah. I'll show you what we can do. Oh, look, we got to break down some of the tables. All right. Now you can reevaluate this. You could organize this by score. Oh, it's just not. Yeah. Something's going on with that data provider. So we'll take a look. But, anyways, yesterday was a bad day. We were right at all the resistance levels. And as you probably know from being here over the last week, every single day I'm like, I'm worried about it. I'm worried about it. I'm worried about it. This is where it should fall. This is where it should fall. And then, of course, we had the Jay Powell meeting yesterday. What I said for 2 or 3 days in a row is I don't think the market understands what's going on. I think there's irrational exuberance. And I think Jay Powell is going to get on stage with a bucket of ice water and throw it on everybody and cool off that irrational exuberance. I hope you remember stuff like that. I try to use analogies so because it's easier to remember. Well, guess what? The water was cold yesterday. The water was cold. And look at this yields on the 10-year went from 4.5 to 4.6. It was actually higher than that. It's come down to only 4.6, really 4, 6.5, right? Well, what does that mean? Well, Jay Powell was clear. Apparently, like he was clear last, he was clear at the FOMC meeting. So I don't get why the market doesn't get it. But anyways, the market had thought the Fed was done, even though the Fed said there wasn't done. The market thought they were dovish, yet they were clearly not dovish. So the market really, I don't know where the market gets their information. Obviously not QuantBox. So, anyways, there was some of that irrational exuberance, and then the Feds made it clear yesterday. No, seriously, we could raise interest rates one more time. You're pricing in cuts, dude. We're still discussing raising. We could totally do it, is what he said. Of course we could. We got 4.9% GDP, right? Like it's incredible. So, anyway, so the market's like, wait, what? Really? You could raise interest rates one more time? So, what that does is in the valuation models, if you put in a future rate hike, that lowers the value of current bonds now. So, the price of bonds fell yesterday on this news because people are like, what, really? You might raise interest rates? Uh huh. Oh, well, now you have to change the valuation model. Price comes down, yield goes up instantaneously. There was also a 30-year bond auction that only had a bid to cover ratio of, I think it was like 2.2, which isn't a lot, which means the government had to pay a little more to get the sales done. Okay. Excuse me. So imagine this, like bond dealers. There's only like, what is there, 12 bond dealers in the United States? And there's foreign ones too. So let's say there's like a group of 25 people or something, right? Like it's really small. And the Fed comes in and says, okay, we're going to sell, I don't know what it was. I'll just make up a number. We're going to sell 30-year bonds, 30 billion in 30-year bonds. Okay. Does that make sense? Okay. What's the price? The face value. Okay. That's where it starts. All right. So then they do this special little auction and they say to this small group of people, again, it's a very small, maybe it's 50 people globally though, right? Like, and they're all big bond dealers, right? And so they're like, what would you pay? Literally an auction. And so just imagine it's a blind auction. Everybody puts on a piece of paper. I would pay this much for this. I would pay this much for this. I would pay this much for this. Okay. And so right? So this goes to the treasury, and what they're saying is there was about 60 billion worth of orders. Okay. They're because each person said, I'll take this amount, I'll take I'll take $2 billion of the 30-year, but I'm only willing to pay this, or I'm only willing to pay that. You get it? So then they gather all these orders. So it was probably closer to 66 billion. And the thing is, well, the prices were low. So it's just like a car auction. If you've ever been to a car auction, just imagine nobody's bidding up. There are buyers, but everybody wants a lower price. Okay. So everybody put in their bids. And so then the Fed goes, or sorry, the Treasury goes in and picks off the lowest hanging fruit and fills the orders, right? Well, in this case, what happened was, the yield was higher. Wait, no, no, wait. I'll do it this way. Prices were lower. So yeah, that pushes it. Anyway, so we'll look at the bond market. Let's just put it this way. It wasn't good for the government because the government had to pay more. That's all. They had to pay more. Or they sell, like this is kind of how each auction is slightly different. But imagine this. Imagine you bought a bond for me and it said $10,000 on it. And at the end of the term, whatever the number of years is, I'll give you your $10,000 back. What's the interest rate? Yeah, I don't know, zero? No, well, it depends on what you pay. What if I sold it to you and you give me $9,000 today, and in 5 years, I give you $10,000? Now you can start calculating effective yields, and that's kind of what's happened. So it was not a good auction. Yeah, 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 not a good auction. And by the way, if you ever go to a car auction, everybody overpays. Don't go. If you're looking for a deal, don't go to a car auction. All right. All right. So, anyways, so that happened yesterday. And then third thing, the largest bank in the world, which is probably a bank you've never heard of, and China is like that. There's like there's 12 million, there's cities of 12 million people you've never heard of, right? There's something bigger than YouTube. And you're like, there's something bigger than YouTube? Yeah, you just don't know about it. China is fascinating that way. But anyways, so a major bank got hacked yesterday. The Russians hacking the Chinese. You're like, oh, their heads are gonna roll. But the thing is, it actually interfered because that bank was one of the bidders on that 30-year auction, and they quite literally in the middle of it had to stop. Right, things got messed up. So, anyways, interesting day yesterday. My big question of the day is, do I hedge? So, anyways, oil, you probably have seen it. Beautiful little double bottom. I think we should probably look at that. Okay. Gold down a bit. S&P 500 down a bit. I was really concerned yesterday. And then I looked at my actual positions and, oh, it wasn't bad. Like honestly, what was this was down 0.8. I think I was down 0.11 or something. I'm like, oh, noise. But I'm worried now tomorrow or by the end of today, I'll be down too. So, right. So, anyways, you got to be careful. So I might have to hedge today. I might have to hedge. I don't want to hedge. Okay. Anyways, euro dollar, hey, buck seven. And then this up. I did get a little something something yesterday in the Bitcoin market, and it did take like 5 years to clear. 5 years, 5 hours to clear. All of a sudden, I get this message: "Ching, you've received some Bitcoin." Like no, after that volatility yesterday, I'm like no, and it's above. My price was filled at above 37,000, and I log in and it's like 36,400. I'm like, no. So I pulled a Kevin, right? And oh, it was terrible. So I'm using technical analysis. By the way, this is just being a trader now, not an economist. Hanging on for dear life. I'm like, please go up. So I'm probably pretty close to break even now. So I might by the end of this webinar just take my money and run. Take my money and run. Get out, get out. Anyways, boom. That's the problem with physical, right? A physical Bitcoin. Like I just want give me my money. What do you want to do today? I don't know. Why? S&P 500, gold, yen, dollar index, yields, volatility. None of it seems interesting to me. Cool. That's helpful though, isn't it? So today I'm just on like hedge alert. Am I going to drop a hedge on a lower high on the S&P 500 or NASI today? Looking at the scatter plot. I don't know why I keep making this smaller. I think I keep wanting to go to the charts. Bitcoin way up and I'm hanging on. It's difficult though. Okay, hanging on. Anything else going up? DAX down, S&P 500 down, Dow down. Do you remember the conversation? I said, can you flip a quarter and get heads 7 times in a row? Well, that's what we had. And I'm like, what's the chances you can do it an eighth time? You're like, well, it's 50-50. Yeah, we'll do it. I know what the math says. It's always 50-50. Uh-huh. Well, we couldn't flip it an eighth time, right? That's the thing. We had 7 up days in a row in the stock market. And then we wake up and NASI's down a bit, DAX is down, right? This is all less than 1%. Let's just look at the indices only. Okay. And NASI down, Dow down, S&P 500 down, DAX down, FTSE down. Okay. Yeah. 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 And then oil's the other one. And it looks good now. You have permission to engage. Yeah. So why don't we just do that? I'm sort of I'm itching to get to the charts. So anyway, so Bitcoin is going up, and that's great. So I'm following the trend there. But the reason I was sort of in panic is I don't like things like this. Wowzer. But look, it kicked off our role reversal. I just didn't think it would happen in 1 hour. Okay. And now it's long gone. So yeah, this is an okay place to get out. And you're like, but couldn't it go higher? Yeah. But that's one standard deviation above a mean. And then this is like closer to, anyways. I'm gonna try to let this run. Um, but I'm frightened. I'm naked and afraid. So I might have to cash out on that. But anyways, what does the technical trend say? Well, if we repeat yesterday, which we're not going to do, then it'll go all the way up here. No, no, no. So we need something more reasonable. A longer term trade, you might measure something like that, or off the bottom of the channel. But even then, it's a 786. It says double top. I mean, so this is really hard. So I would say if you were able to get back here today, you're pretty lucky for one day. And I would be talking to me. Hey, Wayne, you're pretty lucky. Cash out. Okay, and that's what I'll do. All right. So my oh my WTI, we got to do it. Let's do it. Okay. Let's get down to the 15. And yeah, that's a J Lo, kids. Perfect. Oh, so pretty. And if you don't know what a J Lo is, it's a big wide bottom. Old joke. The kids don't get it anymore. But it was funny. It was funny 15 years ago. All right. So anywho, yeah. What do you think? Game on? Uh-huh. I think so. Yep. I think it's plausible. Okay. I think it's plausible. Things to look for technically. Okay. That's why I drew it in the way I drew it. Higher high, higher low. And I would I I would, I would hold it. That's what I would do. I To me, this is an inflation hedge. It's another way to hedge. Um, I think it came down. Oil came down a lot because of China, but at some point, it's all fully priced in. And then so now that it's down, and the next level isn't down to like 65 is the next level to consider this. But if I was able to capture this, if I'm just talking about me now, I would hold it, uh, almost indefinitely in case some geopolitical risk happens or some a natural disaster happens, because the United States is producing a lot of oil. I thought about it. I made a comment yesterday in the swing trading group that someone was talking about oil production high, and that's why oil's low. And I thought about that. Like, what are they talking about? Oh, well, yeah, they maybe they didn't say it that way, but now I realize what they're saying. Production is high. We just don't have any spare. Okay. It's sort of like being rich, but heavily in debt. Do you guys know anybody that make like a boatload of money, like a neighbor or a family member? They're well off money wise, but all their credit cards are maxed and they pull money out of their house to buy a Cadillac Escalade and all this kind of stuff. And you're like, they're rich, but they're broke. That's going to be a theme in my book that I'm writing. But in a way, I think that's where America is at right now. It is producing an all-time high amount of oil. Sweet. But we don't have any in storage. So where does it go? You suck it out of the ground, you convert it into a product, sell it, and there's just no leftovers. Okay. So it's like putting Thanksgiving dinner on your credit card and there's no seconds. No seconds. Ah, okay. Palladium. I don't want to do palladium this morning. Sorry, Emil. But I'll be over at FX Street. I could do palladium and platinum. The big one is platinum. But I'll be at FX Street. I don't know. I think it starts at 8 in an hour. Or is it 9? I think it's 8. Yeah, so I'll be over there in an hour. Okay, but I just got to point this out. Like, This is either going, in my mind, in my simple childlike mind, this is either going to 200 or this is going to 65. So every once in a while, they're like, maybe I'll take a shot. A double bottom is tradable as a bull, and a higher low is tradable as a bull. Okay. And everything else is just bankruptcy court. Okay. Go back to a smaller time frame. Okay. And I'll move this. I changed it. I was doing something yesterday. I mean, all I did was do it this. So I'll put it back. All right. So that was our target a bajillion days ago, or meaning like a week ago. I was worried about a top, then a top formed, then I was worried about a head and shoulders, and then I did a crown presentation, and then I measured the top of the crown to the slope of the neckline, projected out here, and here we are, everybody. Now that's a technical trick. It's sort of like, but whatever, it's meaningless, because it could drop another $100, right? Right. But anyways, here's the thing. The news to use is something like that QuantBox will help you figure out. It's productivity, or it's actually inflation. This is why people buy gold, right? To protect themselves from inflation. Inflation minus productivity. 3.8 minus 4.9 in the United States is a negative number. There is no inflation. Okay. That's how I like to calculate it. And it's not real. I mean, that's not how you do like what real, but it's another version of it. So I'm like, what inflation? Now I am certain, absolutely 100% certain GDP is not going to be 4.9 next GDP. Well, then next GDP, maybe I'll buy some gold. Okay. So, anyways, this freight train's loaded and she's headed south for the winter. All right. So we'll see. I'll see you at the next GDP. Okay. Cool. Who's coming to Nashville to party in December? December 13th. There's a big party in Nashville. Quant boxers, boot campers. Who's going to be there? Investor boot camp. Let me just bring it up. I got to keep thinking about it. I mean, I dream about it. I dreamt about it last night, honestly. Investor boot camp, camp.com/party. Now, let me pop the link so you guys can come. Okay. Okay. Yeah. Go ahead. RSVP. And by the way, just so you know, it's at cost. Like, it's not like, this is how my party's gonna help me buy my yellow Lamborghini. I'm gonna lose money for sure. Like for sure. So, anyways, but come on by. Okay. I might give you a hug and I promise not to slap you on the ass. That's my promise to you. Well, I might, but anyways. So anyways, swing on by. Bitcoin, I got my eye on because I'm sitting on a Bitcoin. I'm like a mother hen. I'm gonna take care of my egg, my crypto egg. Gold coming down as it should, but we're now on support. 1950 is area is interesting, but it could be quite a bit lower. Double bottom on the my WTI. Oh, so sweet. Okay. S&P 500. Yeah, I'm worried. Like I said all last week, I'm worried it's going to come down. I'm worried for sure. And the only reason I haven't hedged is I'm indirectly hedged already. So I didn't actually lose that much yesterday, but probably will catch up today. So here's what I'm stinking. Okay. By the way, look at all these things. They're all previously marked. Nice. Let me get this out of the way now. Um, you can see we broke that massive uptrend. That was the best week of trading in 2 years or something. All right. So here's what I'm thinking I'll end up doing today. Okay. There's going to be a little bit of up, let's say in the first hours of trading, and then I triple leverage short. Okay. Yeah. A triple leverage short that with an ETF because I'm talking about hedging my cash position, right? Not my forex trading account, USD 500 cash. No, my retirement account, for example. Okay. And of course, I have multiple accounts, so I have to take care of all of that. It's work. It's so hard. I have to think about it all day. Yeah, but I'm going to have to do it, and that's risky, right? I'm going to have to do something. So, anyways, gold, oil, Bitcoin. I think that's no. Let's do one more, and then I'll see you over at FX Street. Um, yeah, this was a heck of a move, and now that has fulfilled. Remember the rule. This is something that's taught at at investorbootcamp.com. This is a buy. The target is here. If you hit the target in this time frame, it probably will come back to here. Like that's actually in a training course. It's right. It's the only counter trend trade. So here we are. So I would say back to neutrality. Yeah. Pound. Yeah. Look at that, huh? Based on that same rule, pound would fall to one just below 122. So we're at 122 now. So what is this? 121.80. So based on this same rule, it would drop about another 20 pips, and then I don't know nothing. Amazing counter trends is all right. So be careful. That means like I don't know where these things are going to go by the end of the day because all the logical patterns are at or near completion. So the only thing I'm really looking at is I'm not really looking at like dollar trades to enter. I'm looking at sort of end of the week, m- mopping up, if you will. And of course, the third thing to let you know what's on my mind. Another reason to hedge today is I don't know what's going to happen over the weekend regarding geopolitical risk. And I just think of some young, 18-year-old Israeli soldier crawling through a tunnel that's booby trapped all the way through, and it just scares me. Right. So, anyways, nothing good can come from any of any of it, right? So over the weekend, can something horrible happen? Well, I think it's more likely than suddenly there's a settlement and peace and everything is good again, right? So that's another reason to maybe hedge over the weekend. Hedge it on Friday, exit on Monday, just in case. Me, just in case. Yeah. So it'll be an interesting day. Bitcoin up, oil up, gold down, stock market down. Like it's going to be a tricky day, I think, right? Marx had announced a daily ceasefire for, yeah, but that's not like, okay, that's great if you're trying to flee. Other than that, that doesn't change global markets. There's no billion, there's no like $100 billion fund somewhere on Wall Street. They're like, did you see the 4 hour ceasefire? And by the way, it's not a ceasefire. They're clear. They don't want to call it a ceasefire. Humanitarian exit zone. But there's no $100 billion fund going, well, because of that, let's deploy some capital. So if it doesn't make you to jump in as an investor or cash out as an investor, then from our point of view, nothing happened. But if you're in a bombed out apartment building with your kids and they're like, you got 4 hours to get out, yeah, that's great. That's really good news. Um, Somebody needs it for sure. All right, gotta go. Gotta jump, babe. That was real. Peace on earth. May the pips be with you. May our profits be above average. I'll be rolling over to the FX Street YouTube channel. I'll see you over there, not forex.today. And if I don't see you over there, have a wonderful weekend. And like I said, add fuel to the fire. Um, there's some good news coming for QuantBox for many of you. It'll be good news. And then I have an amazing thing to discuss with you. And I want to know if you want to do it. A major leap in technology in what QuantBox is doing. I'm essentially asking, like, do you want me to build a second brain? But like, if nobody cares, then it's a total waste of time and money. Total waste of time and money. But I'm talking about building a whole new thing, not just like, oh, he added the net change to the table. No, no, no. Big. But I want to know if you care. So I'll figure that out sometime next week. Okay. All right, cool. So